Good afternoon, good morning, and greetings to our audience and participants joining us virtually in Kenya and around the world. Welcome to this learning event organized by USAID's Kenya Investment Mechanism under the theme Building an Efficient Financial Ecosystem, Lessons from Kenya. How have we all done so far towards this end? Today and for the next 2 days, the Kenya Investment Mechanism stakeholders share their experiences, reflecting on what has worked and what may not have worked, leading to corrective measures that will ensure increased impact. We have representation from enterprises, business advisory providers, and financial institutions, as well as the national and county governments, among other stakeholders working closely with this project. Stay with us to hear experiences and lessons learned from the diverse and excellent group of participants, and we hope you identify and benefit from the lessons that are crucial to building an efficient financial ecosystem for businesses to access finance and investments that are needed for the expansion and growth. My name is Hussein Mohammed. I'm your moderator for the day, and I'm here with my colleague, Yusuf Ibrahim.
Thank you very much, Hussein Mohammed, for that amazing introduction. Yes, my name is Yusuf Ibrahim. I'm also a journalist by profession, having worked with different mainstream media houses in Kenya. But I'm here today also to learn, because this is a learning event, right? So we need to share knowledge, we need to ooze out all the knowledge we have as far as finance is concerned, mechanization, agriculture, etc. So let me go straight to the ground rules of the day. And we should all have our masks on, at least for those who are with us here physically. You see 90% of the audience here? Just maybe a few. Let us all have our masks on. We are not yet out of the woods as far as COVID-19 is concerned. Now, we are all encouraged to participate. Once again, this is a learning event. We need to share knowledge. So please participate, speak your mind. Everyone here is expected to share ideas and contribute to the discussion. We're going to tell you shortly how to go about that. And then, if you have a question, any burning issue, feel free to air them out, but in this order. Make sure you identify yourself so that we know who you are. I think that is polite. And then, maybe just mention the organization or the entity that you represent. And then, the question. This is how you're going to post it. Make the question and answer box your friend. Please post the question there, of course by indicating your name and where you present and everything. Something else that is very important is that we should all focus on the problem and not the person. Of course, we know we have differences, in opinions and everything. So let's just be open, and of course, let us all try and respect other people's perspective. That's it as far as the ground rules are concerned. And then we want this session to be very interactive, especially for those who are joining us by webinar. I believe we're about 300 plus at the moment, and they are still joining us. So we're going to have an opinion poll question for you, just to have that interaction. It's going to appear on your screen shortly, and we're asking you, are financial institutions sufficiently supporting smallholder farmers? From where you're seated, from where, the different experiences you've had with these financial institutions, are financial institutions sufficiently supporting smallholder farmers? This is simple, just a yes or no answer, and we're going to look at the poll before the end of the day. And later on, we're going to have some evaluation questions, but that will come at the telltale end of this program. Now, there are those who might not join us for one reason or another, especially the webinar, so we don't want them to miss out on this conversation as far as the digital media is concerned. And please, once you make your observation or comment or maybe highlight from some of the speakers here, remember to use the hashtag USAID Key Learning Event. The hashtag, once again, I'm sure it should be on the screen somewhere. The hashtag is USAID Key Learning Event. This will really help us get traction online. Let me now turn it back to Hussein.
Thank you so much, Yusuf. We go now to our program with our first speaker, Roger Bard, who is the Chief of Party, USAID's Kenya Investment Mechanism that is implemented by the Palladium Group. He has been a banker for more than 40 years. You can all see his profile right now, I'm sure, specializing in agricultural lending and international development. For the past 25 years, Roger has helped underserved farmers across the globe gain access to credit and mechanization. Roger.
Thank you so very much. And good morning and good afternoon, depending on where you're zooming in from. And we're really glad that you're here. So welcome to USAID's Kenyan Investment Mechanism Year 3 Learning Event. We're broadcasting from here in Nairobi, and we are thrilled to bring together today and over the next 3 days are implementing partners, financial institutions, private equity and social impact investors, business advisory service providers, small to medium-sized enterprises, government stakeholders, and of course our private sector partners. It was exciting for me to see over 300 registrations for this event. I am Roger Bird, and I'm the Chief of Party for the USAID Kenyan Investment Mechanism, and I'm really happy to be kicking this event off today. I want to first give some context to USAID's Kenyan Investment Mechanism and then set the stage for what's to come over the next few days. USAID's funded Kenyan Investment Mechanism is a development project that connects business opportunities with financing. Our primary objective is to activate private sector capital into underserved markets for development purposes and development objectives. We're looking to fill that gap between the supply and demand of financing. We help meet our capital mobilization objectives by strategic policy and regulatory reforms that further unlock capital. Now, as a development practitioner myself, what I find fascinating is the model that Kenyan Investment Mechanism uses to be able to stimulate the market. We call it pay for results, and here's how it works. We have partnered with 40 local business advisory service providers and 20 financial institutions with the objective of financing small to medium-sized enterprises. Pay for results means that there's an incentive fee available to those partners if, and only if, they're successful in securing that financing. It's kind of like a little nudge to both the supply side and the demand side of the market to make investments in these underserved markets, such as, for example, agriculture. You know, in Kenya, agriculture represents approximately 1/3 of the GDP, yet less than 4% of bank financing actually goes into the agricultural sector. And we also have an intentional focus in women and youth-owned enterprises because of its high potential growth opportunities. Now, what's really important to understand first is that this is private sector capital, not USAID money. Kenyan Investment Mechanism is not a fund, but a facilitator. Financing comes from banks and and from leasing companies, from private equity and social and impact investment funds. What we do is we help that supply side connect with the demand side in such a way that supports safety and soundness in finance and builds lasting market relationships that shift the financial ecosystem to operate both more efficiently and certainly sustainably. The pay-for-results model is really becoming an effective development tool. For example, last year, for every $1 of USAID support, the private sector dispersed $21.70 to small to medium-sized enterprises, or what we call a leverage ratio of 21.7 times. That's really good value in support for the private sector investments. September 30th marked the end of our third year, our third year. And Kenyan Investment Mechanism has helped the private sector advance over $285 million in both debt and equity investments. This has placed us well on our way to achieve a $520 million target of capital mobilized by year 5, which is August 2023. And this is not just about incentive fees. In fact, the fees themselves are generally 1%. So again, this is just a nudge. Where we also provide the assistance is with our partners for technical assistance in terms of capacity building, targeted training in agricultural financing, areas such as new product development that can mitigate risk and better match repayments to the enterprise's cash collection cycle. There are training of trainers programs that embed value chain financing techniques into financial institutions' curriculums. And we also can't underestimate the value of our policy work, working with both county and national government to build investors' confidence, improve the ease of doing business, and both promote and facilitate new investments that add jobs and smooth out the supply chains and distribution channels. Now, over the next few days, you'll hear from our partners and stakeholders how USAID's Kenyan investment mechanism, excuse me, you'll hear over the next few days how USAID's Kenyan investment mechanism has engaged in the market. We will share with you what's working and what could be improved. Now, in collaboration with our partners, several case studies will be highlighted. In fact, our first session of the day, you'll hear from Jahil Oliver, founder and CEO of Hello Tractor, on an innovative pay-go financing model. So be sure to stay tuned for that. Now, while the learning event is not really about Kenyan Investment Mechanism's accomplishments, I really want to thank the Kenyan Investment Mechanism team for an outstanding year of performance. I want to thank them for their dedication and passion. Thank you so very much. I want to thank the Kenyan Investment Mechanism team for their dedication and passion to improve the financial ecosystem during a time that has really challenged us to create and innovate in order to stay true to our goals and objectives. More and more, we're seeing the effects of the climate change through droughts, floods, unpredictable weather patterns. We saw locusts in biblical proportions this last year. And of course, the challenges of COVID-19 have disrupted employment, supply chains, and distribution channels. I have watched this team each month pause and reflect on both what we do and how we do it. They connect with our partners and stakeholders to listen and learn and exchange ideas to innovate and adapt. And that's what this event is really all about, is to bring that all together. You know, as the saying goes, if you want to go fast, go alone. But if you want to go far, go together. And we know that we can't do this alone. So we're very grateful to the collaboration and support of our partners and stakeholders for their passion and their dedication, and mostly for their perseverance over countless technical challenges that we have all been facing during this, the past couple of years. I also want to be able to thank USAID and the collaboration and support that that team has provided us. It is a collaboration and a journey that we are taking together. Now, regardless of these challenges or adversities, we collaborate, we learn, and we adapt together. And really, that's really why we're here at this learning event and what it's all about. You know, as humans, we're not capable of holding back our passion. We're not capable of holding back our vision or our creativity. We were born to learn, and we were born to adapt. And while we know we can't always get it right, we also know that the only failure is to not try at all. So thank you for joining us. I look forward to a lively exchange over the next few days, and welcome to this event.
Thank you very much, Roger. I feel like we should give him a round of applause, at least for the physical audience here. Thank you very much, Roger, for that lucid, very clear, very informative presentation. I think we've set the theme for us and the energy for us for the next 3 days or so that we're going to be here discussing different topic of discussion. So that's it as far as the Chief of Party's opening remarks is concerned. Now, this is where, shall I say, the rubber literally meets the road, because we're about to start our first session, which is about financial innovations to support agriculture mechanization. We're going to hear lessons from Kenya Investment Mechanism partners. So ladies and gentlemen, it is my pleasure to introduce a very experienced individual in this area. And the moderator of the day is none other than Mr. John Kashangaki, who is the Senior Technical Advisor, USAID's Kenya Investment Mechanism. John, take it on.
Thank you so much, and good afternoon, everyone. Good morning to those of you in other parts of the world. It's really exciting to be here and have this opportunity to lead this very interesting first session, which really is looking at mechanization in agriculture and how to finance that in Kenya. And it's really going to draw on the experiences of some of our partners that have been able to innovate in this area. So we want to understand from them some of the challenges they've faced, the lessons they've learned, and really be able to draw out experiences that we can move mechanization to the next level. As you know, in Kenya, not just Kenya, the African continent, we're lagging behind when you look at mechanization. Comparative data, and I think a couple of the speakers will talk to this, show that for every 100 square meters in Africa, we average about 20 tractors. Globally, the average is 200. So we're talking about 10 times less than the global average. So we have a ways to go, but there are interesting things that our partners are doing, and we want to learn from them today. So we have three panelists. The first panelist is Jahil from Hello Tractor. The second panelist is from Cooperative Bank, Esther Kariuki. And the third panelist is from Musoni, Fahim. So we will start with a short video, and then we will call Jahil to come and share his story. Each of the speakers will have 5 minutes for a brief chat and presentation, and then we will move to the panel discussion for an additional 30 minutes, where we'll really hope to bring out some of the issues that are presented. So we'll start with the video, and then ask Jahil to come and say his piece. Thank you.
Hi, my name is Jahil Oliver. I'm the founder and CEO of Hello Tractor. Now, most people know Hello Tractor for technology to support tractor owners in managing their fleets and all aspects of their operation, including connecting them to our networks of farmers in need of tractor services. But most recently, we launched the brand new flagship pay-as-you-go tractor finance program, where anyone who books 500 farmers in the app will pre-qualify to own their own tractor. This is our way to bring more equipment into the hands of hard-working individuals working in agricultural communities, bringing mechanization to our growers. Join us by going to www.hellotractor.com to learn more. And affordable mechanization services to smallholder farmers across Africa. We currently operate in 13 countries. We're also in the Americas and in Asia. Now, farmers across Africa plant late, undercultivate, and lose income because they don't have access to the tractors that they need. And so what that means is there's a yield gap across the continent that specifically relates back to this lack of power and farmers not having access to the labor that they need to cultivate their most important resource, their land. Next slide. And so Hello Tractor came into the market to address this issue, and core to the solution is yes, technology, but it's also organizing the last mile, making sure that small growers, when organized into groups, our friends at Co-op Bank know this very well, actors within agriculture can now transact with these farmers in a more profitable way to close that mechanization gap. And this is some of the statistics that John alluded to earlier. Next slide. And so what are some of the challenges in financing mechanization, and why does that gap exist? Clearly, there's value in financing tractors. Clearly, that unlocked value produces revenue to service a loan. So what's the issue? Most banks, not Co-op Bank, but all the other banks, don't have financial products that are suitable for this category of grower. They have cyclical repayments. Interest rates need to be right. The lower, the better, of course. And structuring needs to meet the needs of this very unique borrower group. Hello Tractor came into the market with a solution to this problem to help enable more financing. And we don't, money is not our product. We don't see ourselves as competing with banks or financial institutions. We see ourselves as enabling more lending in the space by de-risking these transactions through technology and in some instances, capital. Next slide. So practically, what does that mean? We partner with Moody's, the credit rating agency, to design an underwriting system that looks beyond traditional metrics. If you go into a commercial bank right now in Kenya, they're going to ask you for your bank statements. They're going to ask for collateral. They're going to ask for a pretty high down payment, usually 20 to 30%, and then they'll give you a tractor. But what if you're traditionally unbanked? That means you have automatically been disqualified, and that's the vast majority of our growers, right? So what do you look at? Because you still have to make an assessment based on information that can help you de-risk as a lender. As Hello Tractor, based on our experience in the market, we know how to profile somebody who we think is going to be a good borrower to own a tractor to deliver services to the farmers in their community. We look at their book of business, right? And not just what they tell us, what's in the app, right? How many farmers did you go out and pre-book within the app, walking the plot boundary? We assess each individual plot to make sure it's a productive plot and that farmer can actually pay for tractor services, and that the services that they want across the book is complementary, meaning even serviceable with the equipment that you're requesting. Once you get approved, we give you the machinery, we give you the training, and then we assign you an account manager to actively monitor the performance of your machinery against that pre-booked business. We started this product just this year, raised $2 million with the assistance of Kim, and that is, as you can see, it's having a multiplying effect across the ecosystem, ultimately resulting in more food being grown. $2 million is a small pool of capital to increase productivity by 132,000 metric tons across different specific value chains. But it's being done in a complementary way with other financial institutions in the market, using our technology and our market insights to de-risk these loans, to then crowd in additional financial institutions, because our phase 2 is going to be much larger, right? As we look to grow this pool of capital to close that mechanization gap that John alluded to. But of course, tech sits at the core of this. Each of our tractor owners has the technology to manage their equipment, to make sure remotely they can monitor all aspects of their fleet, from maintenance to usage to fuel and fuel theft, which is a big issue in this market. But then also the booking application. That's what we underwrite. Did you go out with that booking application? And it's free. Anybody can do it. You can download the app right now, download the app and book 500 farmers. We'll give you a tractor. We'll pre-qualify you for a tractor. We still have to look at the business. But that's free of charge, but it's tech-enabled. And it gives us the insights to make an informed credit decision. And then ultimately, when the loan is made, we can then monitor and manage that loan using the same technology that helps you as a tractor owner run a more efficient business. So that's Hello's Tractor and the work that we're doing on pay-as-you-go tractor finance. And I look forward to answering any questions that you all might have. Thank you very much.
Thank you, Jahil. Now you can come up.
Yes.
We'll have our next speaker, Esther Kariuki from Cooperative Bank. Esther has significant experience in corporate banking. She's worked extensively in the agricultural sector. She's now leading the Cooperative Bank of Kenya Agri-Co-op unit. And we'd like to hear a little bit about some of the innovations at the bank relating to the developments of products focusing on asset finance.
Thank you. Thank you, John. And thank you for organizing this forum. We really do appreciate the work that USAID and Kenya Investment Mechanism is doing to incentivize us as financial institutions to take more risk, to be more bold, believe more in the farmers. So just a little bit about Cooperative Bank. We have been able to successfully implement the cow-to-cup financing from the cow all the way to the consumer of the milk. We can go to the next. So just a little bit about the bank. We always like to say who we are because then that really sets the pace of why we are doing what we are doing. Cooperative Bank was started in 1965 by the cooperative movement, and really the people who started this bank are the farmers. So it was the dairy farmers, the cotton farmers, the coffee farmers who believed that they could own a bank. Having come from independence, they could not access finances to carry on their agricultural activity, and they were the first people to really go out there and start a bank. And up to now, we live that vision of innovating to continue supporting the smallholder farmer because it's his investment, the bank. So we are the third largest bank in the country, and we support the entire cooperative movement from the farmers all the way to the savings and credit. And when we talk about the product that we offer, it's not only what we offer as Coop Bank, but also what we offer at a wholesale level to the savings and credit corps. Yeah, and we must also say we have a subsidiary called the CCIA, the Coop Insurance and Capacity Building arm of a subsidiary of the bank that continues to do capacity building for the farmers. So very quickly, what we have done in the dairy sector, our main agenda is to focus on primary production. So if we don't do anything else, if we do primary production, we'll have lived our vision. So primary production in dairy sector particularly, we focus on farmers' inputs. That is everything that goes into the dairy cow. Obviously, having even started by supporting farmers access dairy cows, we do store services for the co-ops and the groups, purchase the cows, and also do farmer advances to be able to continue living their lives as they wait for the proceeds of the milk. Luckily, with our partnership with the Kenya Investment Mechanism, we're able to develop a product for smallholder mechanization. It had been a big headache for us. We have done well in asset financing for the big guys and the SMEs, but the farmer, the smallholder farmer, being able to mechanize his operation has always been quite elusive, and we came up with a smallholder mechanization product which supports the farmer with the animal feed regime, preparation and preservation, the milk handling. We do understand that their hard work can go into waste if the milk is rejected by the off-takers. We also support farmers with value addition, access to processing equipment, packaging, marketing, and also stock financing their stocks once they have cooled and pasteurized their milk. Or packed their milk. We do stock financing and also capacity building and linkages, particularly to cotton farmers, because we've also partnered very well with Kenya Investment Mechanism, supporting dairy farmers access the cotton seed cake. Obviously, the road hasn't been all rosy. We have had challenges along the way. The dairy cooperatives are not able to access assets finance for their member. So the cooperative can access asset finance, but the members. So that was a big challenge. This, you see, if the farmer is not able to mechanize his operation, he relies his activity manually, which he can only go so far. He's not able to scale. And that is why we decided if there's one thing that we needed the USAID KIMS project to support us, program to support us with, was really have a well thought out dairy asset-based product that will reach the farmer. So our smallholder mechanization, the product that we came up with, which has been performing the uptake has been good, and also the non-performing ratios have been quite encouraging. It's the land preparation, planting the silages and the animal feeds, harvesting and preserving it, the feed management, and also supporting the farmers store their, not only harvest, but also manage the animal feed in a way that it will take him long. And now with the changing climate, I mean, you really need to rally behind the farmer for the animal feed to go as far as he can last him. So those are some of the pictorials of what we've done. Those are shareholders. Anything from the simple and sustainable feed, storage. Our farmers there with their cows, the milk, the milking machine and hygiene, the AI, the cow comfort and shelter. Those are things that we have been able to do, and going upstream to the storage, preservation, the pasteurization, yogurt. We're encouraging our farmers to go into the niche markets and put a little bit of fruits and nuts into their milk to get more value. And the transport, for us, this has been a big breakthrough, supporting our co-ops access to the simple modes of transport to be able to get milk from the very interior areas where the normal vehicles can't access. The dispensers, a lot of our co-ops now retail their milk in the supermarkets, and those have been the dispensers that we support them with. And tech. And we are very proud of what Hello Tractor is doing, and we believe there's a lot we can do. We are rolling out a lot of technology to our farmers, from the very simple technology to the very sophisticated technology, so that we can stop looking at the loan statements and the financial books of accounts and more into the behavior. But very quickly, some of the lessons we have learned, it's important to work with partners. It's important to strengthen the farmer organizations, and together we go far. $3 million into the dairy co-ops, 10 dairy cooperatives, 44,450 farmers, 60% of them are women. Obviously, women are big on primary production in this part of the world. COVID has impacted our ability to scale up, but we are slowly getting out and also disseminating a lot of information using technology. So that is what CoopBank we have done so far. Capacity building, we have good partners. Over and above the KIMS and USAID, we have Brookside and KCC and other big players who support us with capacity building and other partners, particularly in the cotton sector. We're excited about that because this is going to offer sustainable animal feed for our farmers. So we partner with the co-ops and link them, do what we call C2C, cooperatives to cooperatives linkages, so that they can run a sustainable model. Thank you so much.
Thank you, Esther. Now we will have a final presentation from Fahim Ali of Musoni. Esther, you can come up. Thank you. Fahim is also an accomplished banker, consultant, risk management specialist. He's worked not just on the African continent, he's worked in Central Asia and other parts of Asia. And he brings a wealth of experience to the discussion today. And currently he's senior officer at Musoni. Welcome, Fahim.
Thank you, John. So my name is Fahim Ali, and I represent Musoni Microfinance. So Musoni is a microfinance institution, and we have supported, or we are dealing with more of farmers and also asset finance loans, and also the other loans. Next, please. So our vision is actually to reach out to the different markets. We are the first microfinance institution which is cashless and also paperless environment. We believe actually more in the environmental. That's why we're more in the paperless and also, the cashless environment. Our module is actually more of high-tech and high-touch module. What does it mean? High-tech is actually more of bringing the technology, innovation, and also the solutions which is needed at the market, and which increase actually our outreach. And high touch is actually more of supporting at the ground level, not only at the tech point, but also, supporting at the ground level. We reach out to the market through the women's, through the youth, and also through the smallholder farmers, through the value chain support and, overall support which we provide at the market. We also, try to do to reach out to the different stakeholders, to serve the market, so that we can offer the different products. We don't even offer only the farming or the agri products, but also we have the different products which support the overall livelihood of the smallholder farmer, which is like education financing, which is also like asset financing, and also the emergency loan product, and also the other products which we support. Let me show you one small clip which will give you more impact, that how we have created an impact of two of our customer story, which is more of the farmers. Next, please. Yeah, next.
Thousands of smallholder farmers struggle to access funding because they don't meet the criteria for lending. Thanks to microfinance institutions, farmers can now receive credit. One such beneficiary is Miss Pauline Wangui, a mother of 3 children.
When I started chicken rearing, I had just little money. I knew it would not be enough. I went to a certain bank and they gave me 100,000 shillings. I used it to rear the first 100 chickens. I had the desire to grow, so I went back to the same bank. They didn't give me more money. A friend of mine told me about Musoni and where they are located in Thika, and I visited them. I went and met with Lucy and explained to her what I needed. She told me what to do and she gave me a loan of 200,000 shillings. I expanded my chicken rearing from 100 to 200 chicken. I paid the loan and was given another loan of 300,000 shillings. I increased the chickens to 400 and then to 500. She also gave me an education loan and another farming loan. So far, she has given me 7 loans.
The good thing about Musoni is that they are friendly. When I approached them, I needed a grace period on the second loan of 3 months. And in fact, they gave me a grace period of 6 months on the 140,000 shillings. So once the 6 months were over, I was able to repay the full amount of money. So they gave me a second one. They normally give the loan within a duration of 72 hours. At times I get the money when I am just doing my daily work in the farm, and you can comfortably pay your creditors, or you do your businesses as you are in your farm.
Thank you. Next, please. As you see in the video, and overall also the challenges the market is facing, the farmers don't need the big ticket loans. The farmer needs the small ticket loans, and access to credit should be very fast. And that's what the Musoni actually bring from the innovation module. We disburse the loan, or we give the access within 72 hours. Actually now we are within 24 hours or within few hours, we can give the access to the credit. And it's very simple. The onboarding process is very simple, just basic KYC. And then again, you understand the customers more. That's not it. We also give them the customer services. The customer services includes the non-financial services, the financial literacy programs, the financial and digital literacy programs, to give them more of the agro training so that, they build more of the farming, activities. The poultry farm, as you see, one of our customer actually had been building, in the environment. And also other financial terms is very easy and affordable. It's kind of a weekly, repayments, monthly repayments, biannual payments, quarterly payments, so that the customers, are flexible to reach out to the market. Access to credit is one of our, subsidies that we actually try to provide our customers. Next, please. This is a kind of a service delivery module. Everyone actually asks that, how the Musoni service delivery module works. So we have actually the two, major point. One is actually the group lending. Group lending is the typical group lending with the 10 group members. They come to us and they want to create the group. We do it as a co-guarantee mechanism. We form the group. The group is actually formed with the different, charters of the group within. We create the chairman, we create the secretary, we create the treasurer within the group, and then the group is actually run with the, the module. Then again, we have the individual smallholder farmers also, which comes to us, and again, the onboarding process, as I said, is very important. Previous slide, please. Then afterwards, previous slide. Then again, they work with the inputters. We give them the input services. We give them the insurance services. We can give them the the buyer services, we can give them the non-financial services. We connect them with the value chain aggregators, off-takers through these undeveloped services with the smallholder farmers. Our more reach is actually smallholder farmers with the very basic loans starting from $50 to 30,000 US dollars. And actually more of our loans actually goes unsecured loan and cash flow. The major challenges in this service delivery module which we have actually faced is reaching out to the market. How we can take the risk. The risk taking is actually very difficult, and that's why the KIN have really supported us with the product development. With the technical services, that what is the research and where we need to go. What is actually the niche market where we need to start with our product services. Connecting our product also with the tech module so that we can reach out to the market and our outreach is actually increased. Then the second also biggest challenge which we face is taking the risk at the point, because no one actually went over there in these rural areas, more rural areas. Like for example, we are doing one of the focus group discussion last week in Molo area. The M-Pesa merchant was 6 kilometers away from that particular Molo branch or from that particular Molo rural area. And this is how, we reach to the market over there. And this is how, the USAID and also the KIM have really supported us to the DFC also and guaranteed our loan. We have actually got around 1 billion Kenyan shilling guarantee, and that guarantee was for 5 years, as you know. And then that 5 years, we have utilized that one within 1.5 years. And, even the ratio of repayment is almost 99%. So this is how our service module, delivery module actually works. Next slide, please. As I said, we also do the non-financial services. So you can see our customers are flying with the certificates. They are very happy once they get any trainings, and then they show in the market. That is how the trainer of the trainers works in Musoni and all that. Next slide, please. This is how our product value proposition works. I will only pick the first point, that whatever the product planning which we do is always focus on the human-centered product design. We don't go what is the other financial institutions are doing or our competitors are doing. We do FDGs, focus group discussions. We do more of our data analytics. We have a inbuilt, credit scoring module which actually help us a lot to understand the personalized product services which our customers need. All these points which you can see is all through the technical advisory services from our partner, which is KIM, and also, the services which we have. And this is how, we launch our product with the different steps as you see on your screen. Next slide, please. The impact is always high, and you can see that we have reached out to the age group, which is more youth. 64% of our age group is youth, and all of our product or our portfolio, 76% is actually in the rural area. And also our gender distribution is more of female. Almost 70% is now female. And this gender is not only with our customers, but also with our staff, because that is all what we believe, that the gender transformation business module is important in the services. And also the other indicators you can see, we have also customer satisfaction level. We do the real-time customers, feedback, and that's how, help us to reach out to the market, deal with the partners also, the procure partners also, the agro dealers, and reaching out to the different market through our impact module. Next slide, please. And also we work with the CPP. The CPP is the client protection principle. We are the only microfinance or the first microfinance in African continent which is SMART certified. SMART certified is from the Central of Financial Inclusion, and we are certified with all these principles which you can see: over indebtedness, that is inbuilt in our in our systems, transparency, and the other principles. I will only talk on one, which is fair and respectful treatment of clients. This really helped us in the period of COVID, because that is how we reached and to the fairly treated our customers, not forcefully recovery and also only asking the money. And no, we have actually supported them more, which we will definitely discuss at the point of our panel discussions also. Next slide, please. In 2020 or 2021, most of the financial institutions have actually faced a number of challenges. We also have faced the challenges, but we are also awarded with the 3 awards, two actually from the Transformation Awards, which is from the MENA region, And we are the only financial institution who got actually these two, innovation and also the best customer service. And one is actually from the tech module, also from the digital tech module, which is recently actually we got also this best microfinance in the tech solution. Thank you so much. I think I will cover the other questions in the panel.
Thanks. We'll hold for a bit before we move to the panel discussion. Great. Welcome, distinguished panelists, and thank you for all the audience, the viewers and listeners with us today. So we've heard the very interesting presentations from the panelists covering a wide range of areas. I want us to now just go into a chat and just ask the panelists to relax. I'll ask a few questions, but really we just want to draw on the experience that you have working on the specific areas that you've been working on, and try to draw out some lessons that all of us can benefit from. So I'll start with Jahil, and just ask the basic question. You've been running an IT business, Hello Tractor, for a number of years now. Started off in the US, but you've worked in Asia and Nigeria, and now in Kenya. What was it really that motivated you to move to setting up this pay-as-you-go system? And what challenges did you face trying to set it up? So what motivated you to actually want to be in the tractor business as opposed to being the IT space? And then what were the challenges that you faced trying to set up this pay-as-you-go financing mechanism?
Sure, thanks, John. So my background is in technology, is finance, right? And when I looked at the opportunities in African mechanization and agriculture more broadly, what I saw was an arbitrage opportunity, a trade where, yes, the market is risky, but the upside is unbelievable. And that upside, I thought, in my estimation, was mispriced. And so that was my initial reason for starting Hello Tractor, right? Now, when we got into the market, we started in Nigeria, found some quick and early success that validated the product that we were selling, this technology that we were selling. And, but what we saw was there was just not enough equipment to service the pent-up demand. So in Nigeria alone, we got about 2,000 tractors and combines operating across the country. And quite literally, they travel across the country servicing demand. But there's never enough equipment. We always have frustrated farmers at the end of the season who don't get the services that they request. And we thought this is an opportunity to inject liquidity to support more equipment going into the market. As Roger stated earlier, in Kenya, 4% of commercial bank financing is going into agriculture. That's probably, of that 4%, probably 80% of it is coming from Co-op Bank. And across Africa, it's even lower. It's about 1%, right? Despite agriculture being so important to the continent's GDP. And so we thought financing new equipment, injecting liquidity to finance new equipment in innovative ways, using technology, would be a way to solve that problem. So that's what led us to the pay-as-you-go product.
Great, thanks. And I think we'll come back a little bit to that. But some of the key elements, obviously, is the demand that you saw. And I think we heard from you, Esther, that you also saw the demand. Even as you were lending to farmers for the traditional inputs and other services, you realized that mechanization was an issue. Can you talk a little bit about that, the realization you had, and also the process you went through in developing the new product? Yeah.
Thank you, John. So as we all know, the average age of a Kenyan farmer is anywhere about 60. So you can expect that with that kind of an average age, still, these farmers still engaging in the activity manually, no wonder we are food deficient. So as core bank, the uniqueness of our business is that these are not just statistics that we say, but this is the average age of the people in the cooperatives. These are the people who started us. And so as a way of continuously innovating and asking ourselves, how can we not only support them to scale their operations and continue, if you're 60, 70, doesn't mean you stop living. You still continue engaging in an economic activity. But how can we support them to engage in an economic activity sustainably? But also the headache of how do we attract more youth into the co-ops, into agriculture? The youth want to use technology. The youth want to engage in an activity where it's mechanized, and they can see, sustainability of what they are doing. So I think for us, it's that headache of how can we attract more youth, because we believe that is the sustainability of the agricultural activity. And that's why we thought maybe if we spend a little bit more time in developing a product that will be very tailor-made, particularly in dairy. And to be very honest, John, if you look at the people who operate the tuk-tuks, the boda-bodas, it's the youth. Yeah. It's the young men and the young women, the people who come to operate the equipment for feed conservation and even driving those tractors. These are the youth. So we think if we continue like that, we will solve that problem of the average age of a Kenyan farmer being 60 and above.
Excellent. I think we'll keep that youth. I think we'll talk more about that. But you talked about the interest in technology, and I was just interested from the Musoni side. You mentioned you're paperless. You've used technology throughout your institution. You're really tech-enabled. Maybe just tell us a little bit about that, particularly as it relates to your lending. How do you do, for example, you're a microfinance institution that does group lending. How do you mobilize the groups, and how is everything done on a technology platform? Or do you actually have physical presence as well? Maybe talk a little bit about that.
Great, wonderful question. So how we mobilize the groups first? We have a different marketing techniques in which we have inbuilt in our product services. So we have first, kind of a reward systems within the groups to bring the new groups. And then again, we have, marketing techniques also through the tech module also, and also, the word of mouth. Most of the financial institutions call their credit officers as a loan officer or credit officer or something like that. We call them WCO, Wealth Creation Officer. Wealth Creation Officers is like creating your wealth, it's managing your wealth. So we have, as I said, high-tech module and then high-touch. Now, how does the high-touch module actually works? Once you onboard, for example, as a group or as an individual, we ask you that, do you want to continue with the individual, or can you bring the 5 members as a group? And they say, yes, we can bring it. And once we say that, okay, if once you bring the group, it will be good for you, and then we can go a long way. Because individually, it will be hard for you to manage your cash flows, and also the risk, as an institution or as a financial institutions, it's very hard to take the risk. And sometimes the individuals are actually not permanent residents, or, their cash flows are not actually the good. So once the group co-guarantee mechanism works, it is very easy to lead them. And in group, actually, once you have a groups, then, the other groups automatically actually creates, the word of mouth goes and the people actually goes. The main point here is that how you build the credit relationship with your customers, because that is the key. It's not only financing and then leave them. It's how you build the credit relation with them so that, you grow with them, and you also grow, but they also grow with you. Not only with one. You have heard of one of our customers, Pauline. She started with actually $200, 20,000 Kenyan shillings. Now she's doing almost $300. So from $20 to $300, how she started and how she's growing. Right now, she is actually employing around 10 of their employees. So that's the impact, which you can see. through the group mechanism and also, through the individual. So definitely the CRM module, the customer relationship module, really have helped us. And that CRM module was also, helped by one of our partner from the USAID, Fintraca. Who have really helped us in the technology, bringing that module and bringing that again, increasing the mechanism at the market. Yeah.
Great. So obviously, understanding the customer is critical in a lending process, and I think that's what your system is helping you to do well. And I think that moves me to the next kind of set of questions that I wanted us to discuss a little bit, is relating to, many people say smallholder farmers are risky, they won't repay, they have seasonal payment patterns, they don't have collateral. I want Jahil to just talk a little bit, because you talked a little bit about it. How are you dealing with that? Just 2 or 3 words. You don't have to, you talk quite a bit about it, but just to zone in on that. And who are you really targeting? Because I understand you're targeting even more risky customers with your pay as you go.
Yeah.
So how are you dealing with that risk? And then I'll come to you, Esther, about that.
Well,
you've talked about that, so yeah.
Everything you said is true. So I don't want to shy away from the fact that base of the pyramid tends to be a risky population if you talk about it at the macro level. It's true. But I think what we've done at Hello Tractor is really twofold. We identified groups of growers that, number one, are willing and able to pay for mechanization. Still small, still living at or below the poverty line. That's 93% of our customer base is that profile of borrower. But they see the value in commercial farming, and they're willing to invest in commercial farming. That's number one. Number two, you have to be realistic. Farming is a capital-intensive, low-return business. In the most productive agricultural markets, if you look at the Corn Belt in the U.S., the average return on assets is about 5%. That's terrible. You can make more than that driving a boda, okay, in Kenya. That's the reality. So in an environment like that, how can you use things like technology, and Musoni does this well, to collapse the supply chain, remove unnecessary margin, and make the product more affordable? That's really important, and that's where we focused with our pay-as-you-go product. And then use our knowledge about the market, and this is evolving. We don't know everything. We make a lot of mistakes. But use the information that we do have about the market to curate a customer base that is lower risk than the broader population, and then lend tractors into that pent-up demand for service, and use technology to make sure we get the money back out and recycle it through the system. Prove a use case to then crowd in more risk-averse players like commercial banks and maybe even offshore investors. But that's our approach.
Great. And we'll come back. You've talked about potential partnerships. But Esther, you mentioned your loan recovery was quite positive. So there are 2 flips of the coin to this question. The first is great. What are you doing to ensure that your loan recovery is good? The other flip is, are you being too risk averse? Some people in the audience may say, I've tried to go to Co-op Bank for a loan. It takes too long, it's difficult, the collateral. So what kind of, first start with the first question, and then how are you moving to open up and scale your product to bring in more higher risk customers? Yeah.
Thank you, John. So we are a cooperative bank, and we've always believed in the cooperative model. For us, we lead from cooperatives. So that has worked for us because obviously farmers together, and I really want to echo what he's also said, through the groups, it's also proving for them, as it has always proved for us, that when the farmers are together, because a cooperative is one big farmer, giant farmer, a collection of all these farmers. So at the end of the day, we don't get to burn our fingers because we kind of have social collateral. That has really resulted into our good non-performing loan ratios as far as the lending to the cooperatives is concerned. So what are we doing about it? It's moving from the known to the unknown. In agriculture, we lead from the cooperatives. We learn and gain our insights from the cooperative. I was just telling him when we were having a quick chat there that when a cooperative comes to CoopBank, and perhaps they don't qualify because they don't have one or two items, key items, our work is to make sure they access those items. We cannot tell them, we cannot turn them away, because where do they go? There is not any other cooperative bank in Kenya. So our work is to make them afford that credit, qualify for that credit, and also using that knowledge and insights to support the individual farmers and the groups out there. And so really we cannot talk about our agricultural lending without really thanking USAID. We've done amazing things in this sector, particularly smallholder farmers, from the dairy farmers in Maasai land to our rice farmers in western in Nyanza, because we always knew the fantastic idea of the USAID guarantee to incentivize us to jump in. And when we've kept jumping in, we've realized it's not as risky as we thought. And so we don't need the floater. We are able to keep swimming and keep going deeper and deeper. And so that's what we intend to do, just scale it up from the lessons we are learning from our partnerships.
Great, thanks so much, Esther. I'd maybe like to see if there are a couple of questions that are coming from the floor that we can respond to before we come back to our discussion. Are there any questions from the floor?
Yes, John. We have several questions here. We have one from Eldoret. I'm glad we're being watched from the Rift Valley. That is, Ken is asking, I'm a 25-year-old potential dairy farmer with zero collateral. How can I access finance when I've hardly worked? I have tried several banks, but no one is willing to risk with those in my age bracket by financially disadvantaged. So I think that question is clear. And can I ask like two, three?
Just two, yeah.
Yes, one more from Bosire Allen from Kitale is asking, what has been the uptake of the tractor model, especially among the youth? I'm sure that is a question for Jael.
Yeah.
Yes.
So maybe I'll start with Jahil. Maybe it's easier, and then move to Esther and Fahim if they can tell us about the youth.
Yeah, I mean, the demand for tractors is actually too good. What ends up happening every year is that we have more demand than we have tractors to meet the demand. And so that creates a lot of frustration, which is why we created the tractor finance product. I would say, generally speaking, I mean, from our perspective, demand is great. From the market perspective, there's a lot more work to do to fill the gap. For the farmer in Eldoret, go to hellotractor.com/financing, fill out a form. You'll be trained on how to use the booking application. If you secure the required number of farmers, we'll get you a tractor. It's that simple. But that means you have to work. So you got to find the farmers, especially if you don't have collateral or cash, right? You're kind of starting off at a disadvantage. And so you got to get out there and you got to find farmers that are willing and able to pay for services. We will underwrite that. And if you are approved, you'll receive a machine that can service that demand and earn you some good money.
Great, that's good news. So I hope they're paying attention, all the young people. Esther.
Yes. The young man from Eldoret. I think it's exciting to see the youth asking these kind of questions. And to be honest, I think for us as financial institution, I know he will say something about it, is the one question we keep asking, do they have the capacity? Because it's not just, I want to do dairy farming, but do you have the capacity? But also the willingness to work with the financial institution to create capacity. In agriculture, we've increasingly learned, and I'm increasingly learning, that farming is equals to the farmer. I mean, the farming activity is as good as the farmer. So if you don't invest in building yourself and your capacity as a farmer, you will not succeed in farming. And many times, the youth come with no stake in the game. What's your stake in the game? Perhaps it's your experience. Perhaps it's the capacity you've built for yourself. You've worked in a dairy farm somewhere. You're coming with experience and with experience and know-how, or even having partners like Kim. You know, we've had customers who have not had too much knowledge, but because they have partners and consultants who are working with them, then they have the technical capacity to even do the farming, because we get paid from a successful farming activity.
Yeah. Great. Thanks.
Good question, actually. I will not repeat what my colleague have already said. I will straight invite that young men or young women to actually access to the Musoni. So what we do, if the people actually want to access the loans, they actually onboard themselves first. Once they onboard, they actually see that from their capacity point of view, how much they can access from our credit scoring module, as I talked in my presentation. You will know actually from your first hand that you know how much you are actually capable to do that one. If you want to reach out again to our physical WCO, as I said, Wealth Creation Officer, he can actually reach out to you more, give you more understanding that how you know the loan amount will look like, or the financing amount will look like. Then again from there also we will build your capacity. As we said, or as my colleague said, that you know sometimes you do not have the capacity. So we'll try to build the capacity on the agro, kind of activities. First, we understand you. It's more of personalized activities. It's not like whatever you are doing, or we can just give you the loan or the lending facility, and then we can go and then you can do also your business. No, we can actually support you. What exactly you are doing, and then again, supporting you from the personalized services. I request that young men or young women that please reach out to us, and definitely we will support you. We'll bring your story also in the next event, maybe in the camp. Thank you.
Thank you. Another one or two questions from the audience, do we have?
Yes, John, we have several, but these ones they've not mentioned where they are or where they are asking the question from. So one is asking, some assets the farmers borrow to acquire are of low quality and not long-lasting. Often after purchase services, or spare parts are not available and equipment lies idle, making it difficult for farmers to repay the loan. So what approaches are you using to reduce these occurrences?
So I don't know if you got the question, but basically it's sometimes you find farmers they get the wrong end of the stick with the assets that they buy. They've borrowed against those assets. There are no dealers in place to service them. So maybe Jahil, you can talk about it, and then Esther.
Yeah. Well, I mean, and admittedly, the tractor and farm equipment supply chain is pretty complicated, overly complicated. And so Hello Tractor's kind of doing two things to address that issue. I mentioned earlier collapsing the supply chain, bringing down the price of the equipment. That's important. The second thing is through partnership, right? So we work pretty closely with some of the top tractor manufacturers. John Deere is one of our closest strategic partners, to make sure that when equipment gets sold in the market, it's getting sold with accountability. And that's also where technology helps, because if a tractor breaks down, then and the data is captured on downtime and how long it took for a technician to go out, it can be monitored and managed all the way up the supply chain to the manufacturer, who cares about their brand and the protection of that brand reputation in the market. The second piece around tractor utilization ties back to how we designed the tractor finance product in the first place. You can't come and request a 3 or 4 million shilling loan unless you already have a customer base. That's kind of crazy if you think about it, especially if you're unbanked. It's kind of weird to go and ask for 4 million shillings and you don't already have a book of business. So what we say is, we don't care that you're unbanked. That's actually okay. We're excited about that. But we want to make sure you have a full book of business so that when that machine goes out, we know every single month, every single day, who exactly your customer will be, and we'll track your performance against that book. And we have really tight covenants in place to monitor and manage that credit throughout the entire credit cycle. So if you fall short, then we can intervene. Now, we don't want to default, we don't want to trigger a default and take your tractor. But what we want is control to step in and say, it looks like maize growers in Busia are struggling right now because your farmers are not paying for the services that they pre-booked. But we got some cotton farmers. We work with Co-op Bank. We got cotton farmers in Busia. They actually need mechanization right now. I want you to divert the machine to that area, that local government area, and service those farmers to mitigate the default before it even happens. It's like that movie Minority Report with Tom Cruise, where they catch you for the crime before it happens. We want to catch our borrowers before they default using partnership, and that's what it's really all about, partnerships with the OEMs, partnerships with groups with organized farmers. Musoni's got organized farmers with liquidity. That's a great partnership, right?
So that's, you've come to the final question about partnerships.
Boom.
I want to ask Esther to talk about partnerships, because you shared that as one of the lessons learned.
For us, we've also found incredible value in partnerships. Remember, if a farmer is disadvantaged by having a low quality asset, and that asset is financed by the bank, the actual loser beyond the farmer is the bank that financed the low quality asset. So for us as CoopBank, what we've done is invest in partnerships. And we get to dictate and really advise our clients that we may not want to, we would discourage you from buying this kind of an asset from this kind of a supplier. And we've built over time a pool of good partners, the Toyotas, who support us not only with just, availing the asset, but also capacity building, training. They run an academy, and right now we are actually in discussing the modules, some of which will be us doing capacity building in financial literacy as they engage in capacity building on assets and on the assets they are supplying. But also partners like Brookside. They have wonderful insights of the quality suppliers in the market. So we have quality assets out there which when we recover, which is really rare, but when we recover, we are also able to sell again to other clients. But lastly, John, is CoopBank has partnered and invested in one of our new subsidiaries called CoopBank Fleet Leasing. Okay. So we have a leasing subsidiary which is really coming in to support our asset portfolio and also building, because they have capacity in assessing the asset providers and building that portfolio of quality assets. So that's an exciting one that we think will really de-risk and help manage our asset base.
Great, that's encouraging. I don't know, Fahim, if you have anything else to add on that specific question or on partnerships broadly.
I will just add maybe one feedback on managing the partners, because you have maybe a different partners, as my colleague have already said. So how we actually manage our partners? We actually get the real-time data from our customers. Understanding that once the partner is dealing with our customers, because again, on back of the service is us, is a Musoni, is the financial institution or the institution who is faced at the customer's level. So what we do, John, we actually try to get the real-time customer feedback on that particular partnership, be it as an input, be it as an insurance, be it as an asset finance, or even the technology partner, because if the technology is not working, again, everything will be disturbed. So real-time feedback. So feedback actually comes at the time of onboarding, at the time of disbursement or financing, and at the time of when the loan or the financing is actually occurring. So that real-time data really help us through the tech module again, which we have inbuilt in our system. The second one is also the focus group discussion. Don't forget that we still need to go in the groups or meet our customers to understand the dynamics at the ground level, because we at the head office may be thinking everything is working well, but at the ground level, maybe the partner and our customers, the reality is different. So we really need to do the focus group discussions, which will help us in our current and the future decision making on the partnership. Thank you.
Great, thank you so much. It seems like there's a lot we could say, but we really appreciated the inputs from all of you. And a lot of lessons, customer-centric, how to manage risk, partnerships, focus on youth. I think there's a lot of rich information. And what I think was encouraging is to see that there's potential synergies that maybe haven't been explored that we need to explore more, and that's one of the lessons that I think we need to take going forward. Just 30 seconds each of you for your last words. We really are still very, very far below where we need to be in Kenya and on the continent when we look at smallholder financing. How do we scale what you guys are doing? How do we push things to the next level? 30 seconds each and then we'll close. Thanks.
I think it's important for the offshore capital to understand that the risk story is fully understood. That's actually a gospel that's been overtold. But there's a lot of opportunity. And I think it's at that nexus where foreign investment can come in. I think technology obviously plays a huge role. You've heard that on the panel. And then for within Kenya, we're actively looking for new borrowers. We don't expect the traditional requirements of a commercial bank. So go to hellotractor.com/financing to learn more. Thank you very much.
Great.
Thank you. Yeah, so representing the commercial banks, you do know commercial banks don't have money of their own. We have your money that we are supposed to lend responsibly, recover, and make sure that when you come to draw, you find it. So we really don't have a lot of room to guess what we are doing. So I think what we have to do as financial institutions is to innovate, use data, use technology, leverage on insights that are coming, and partnerships. If there's anything that I have learned is the strength of partners like USAID, helping us to take risks that we would not ordinarily take, but also along the way realizing it wasn't that risky. It was just a perception we had. And so we can scale up from what the insights that we've gathered from that head start we've already. So if we can get more partners like you said, pushing us and to the deep end, we'll soon realize that it wasn't that risky.
Thank you.
I think that my last shot will be like, if you go and support these smallholder farmers, and once you go at the ground, you will see there's a need of a different services or products which the customers or the smallholder farmers also need. One of them is also the wash products. Second is actually the edu finance. It's actually connected with each other, asset finance, all these things. My last point will be that, as the partners like USAID, Kim, or the other partners, continue supporting, the financial institutions, so that together we can actually do the inclusive finance at the ground level. Thank you.
Great. Thank you. So I'd just like to thank all of you once again for participating in this first forum of Kenya Investment Mechanism's learning event. We really appreciate your taking the time, and as Kim, we really valued you as partners, and we continue to value you, and we're really looking forward to drawing out some of the lessons from this going forward. Thank you very much.
Thanks, everybody.
Hello Tractor, teknolojia imenisaidia sana. Inanisaidia nijue katika hii huduma pale napatiana services. Booking agent ni wangapi wanataka waende wafanywe hiyo kazi. Na kazi gani wanataka. Mimi mwenyewe nilijitokezea decide kuinvest, nikanunua equipment zote za mkulima anataka. Sasa ndio niko nayo wider network. Kama hii disk harrow, nafikiria hii ndio ya kwanza ile inafanya kazi mzuri kabisa. Ule mtu anataka afanywe kazi haraka haraka, na disk harrow ile inatumia hydraulic. Sasa watu wengi wanaamua kubook my number which is 6100.
Well, here we are back, and that was a great session, and thank you so much to our panelists. Now I'm really pleased to introduce Matt Hutcherson from USAID Kenyan and East Africa Mission. Matt heads up the Office of Economic Growth and Integration at the mission. This is the office umbrella in which Kenyan Investment Mechanism falls under. And Matt, we're really, really grateful for you and your team's wonderful support that you offer to us, and that it's helped propel us to get into the results that we've had. We're looking forward to some comments from you about USAID and how you fit into the market more globally. And thank you so much for the time today.
Okay. Thanks a lot, Roger, for that introduction. And thank you, everybody else, for being here. It's great to be with you. My understanding is that there are about a combination between the folks that are here in person and online virtually. We have around 400 or so participants in this, and so it's just an excellent turnout, and really happy to see that. So thanks everybody again for being here with us today. The U.S. government and the government of Kenya have enjoyed a strong partnership, working together to engage the private sector to overcome many of the hurdles to investment and trade in Kenya. The USAID Kenya and East Africa mission supports private sector-led economic growth in Kenya because private sector growth is the most effective and sustainable path to job creation and poverty reduction across the country. We also aim to support Kenyan-led, Kenyan-owned, and Kenya-managed solutions because Kenyans are best placed to determine sustainable ways to grow business and investment opportunities across the country. Today's learning event is a great opportunity for us to reflect on what is working and what is not working and how we can partner together to support Kenyan businesses, especially small and medium enterprises. SMEs play a critical role in Kenya's economic growth. According to a report by the Kenya Association of Manufacturers, SMEs contribute approximately 40% to Kenya's gross domestic product. To date, USAID, through the Kenya Investment Mechanism, has supported over 300 SMEs to access over $270 million in finance and investment. This has led to the creation of over 1,500 jobs and has improved the livelihood of 2.6 million smallholder farmers and enterprises. Speaking of farmers, agriculture is a key sector to focus, is a key focus sector for USAID here in Kenya. Kenya is also a target country under the U.S. government's Global Food Security Strategy, which implements the Feed the Future initiative. Agriculture is central to Kenya's economy, as you all know, contributing to more than a third of Kenya's GDP. However, agricultural productivity has stagnated in recent years, and SMEs in agriculture face issues accessing finance that they need to grow and scale their operations. USAID, through the Kenya Investment Mechanism, understands the importance of supporting SMEs with business advisory services and access to finance, especially in underserved sectors like agriculture. We also understand the uphill battle that youth and women-owned SMEs face. In order to improve market systems and foster job creation, we need to ensure that business and investment opportunities are inclusive of underserved groups that are often marginalized, like youth and women. If women could fully participate in Kenya's economy, just as an example, their activities could add $18 billion by 2025, and that's about 22% of GDP. This is why partnerships with commercial banks, MFIs, microfinance institutions, and investment funds are key. Through the Kenya Investment Mechanism, USAID works with these financial institutions to provide partial credit guarantees for loans. We specially target underserved borrowers, including rural farmers and minority-owned SMEs. We also invest in an improved business enabling environment, support pro-investment policy formulation, and support the capacity of the national and county governments to attract both foreign and domestic investment. Through the Prosper Africa initiative, the U.S. government is bringing together a full suite of services and capabilities across 17 U.S. government agencies to increase significantly two-way trade and investment between Africa and the United States. Through Prosper Africa, the Kenya Investment Mechanism has helped raise over $96 million in capital, part of which is supporting the regional expansion of partner companies into new markets within East Africa. The Kenya Investment Mechanism, through its partner financial institutions, has also supported over 116 agricultural commodities companies engaged in regional trade to access $22 million in capital. To do this, we are not only partnering with the private sector, but also with the government at both the subnational and the national levels. It's important that Kenya's two levels of government work together to deliver services to Kenyans through the Devolution Ministry and the National Treasury. I appreciate National Treasury's focus on service delivery, even during the COVID-19 pandemic, which has been a challenging time as we implement measures to keep everyone safe and healthy, but also work to stimulate investment in Kenya's economy. We've also seen how the county governments have stepped up during this pandemic to implement business-friendly policies that increase private sector investments. By building strong enabling environments at both the national and subnational levels, we're working to increase public-private investment across underserved sectors like agriculture, water, and sanitation. Addressing the secondary impacts of COVID-19, especially the economic impacts, is an important step to building resilience from future crises. It's important to support sustainable jobs for Kenyans, helping the population support their families through both the good and the bad times. Today's learning event gives us the opportunity to collaborate, learn, and adapt our work to address the challenges facing the business sector. Together, we can achieve lasting solutions that support inclusive economic growth. USAID looks forward to working closely with stakeholders to advance Kenya's sustainable economic growth, and we thank you very much for your partnership thus far.
Thank you very much, Matt, and thank you for making the time in what I'm sure is a very hectic and busy schedule. And we really appreciate the collaboration with USAID. You know, as you speak about Kenya-led, Kenya-owned, and Kenya-managed, these are challenging objectives and challenging strategies. And what's interesting is as we have worked together and worked on sharing results and opportunities, collaborative learning and adapting, we really appreciate USAID's flexibility for us to be able to try ideas, try initiatives, and then be able to pause and reflect and then adapt from those. So thank you very much for your great support. And now it's really with my great pleasure that I'm able to introduce our chief guest, Dr. Julius Moya, the Principal Secretary of the National Treasury. Unfortunately, P.S. Moya had to travel out of the country on Friday. He's off in Glasgow, hopefully helping us all solve some problems on some climate initiatives, which we really appreciate his efforts on. But we were fortunate to manage to get some pre-recorded remarks from him, and so we'd like to be able to play that for you now.
Good afternoon, everyone. I am pleased to speak to us all at this learning event for USAID's Kenya Investments Mechanism. I say this because what Kenya Investments Mechanism does in this country is quite impressive and is quite a big undertaking in terms of supporting the ecosystem of the demand side, of the supply side, and also the intermediation of providing and mobilizing private capital to support micro, small, and medium enterprises and other forms of undertakings like policy, governance, and many other things that the public sector gets involved in. Events like this, good people, highlight the importance of collaboration with various partners, and this is specifically important when we want to achieve inclusive, sustainable growth. I'm also pleased to note the focus that USAID puts on collaboration, on learning and adapting. And in this case, USAID actually has remained true to their goal to foster Kenya-owned, Kenya-led, and Kenya-managed growth in the country. I want to say thank you very much, Matthew Hutchison, and indeed your esteemed team at this USAID mission. As many of you may be aware, the government of Kenya has established what we call a credit guarantee scheme, and this one focuses on micro, small, and medium enterprises, commonly referred to as MSMEs, and we launched this in December 2020. The scheme is part of the portfolio of the government's interventions which are designed to cushion and ensure that we support MSMEs from the effects of the COVID-19 pandemic. And this is done in collaboration, especially with the private sector, which is the key driver of enterprise in this country. And this is the case globally. So this credit guarantee scheme, the way we designed it and the way we intend it to operate, and it has been operating so far, is to enable financial institutions to extend credit facilities to MSMEs that meet some basic criteria and requirements. And some of these include compliance with tax obligations and business permits, and also having a good credit standing. So this finance is expected to be utilized for working capital, for acquisition of assets, and also recovery from the COVID-19 impacts. Friends, a credit guarantee scheme is effectively an insurance that gives lenders the confidence to extend various credits. For instance, it could be loans, it could be overdrafts, it could be letters of guarantee, it could be letters of credit, and this credit would be extended to high-risk borrowers at flexible terms and often faster than under ordinary circumstances. Therefore, the move by the government is a great show of our confidence in local enterprises which have soldiered through what is clearly the worst global crisis unlike anything we have experienced in our lifetimes. And so the key elements of the credit guarantee scheme include the following three items that I will mention in turn. First, providing risk-sharing cover to participating financial institutions who lend to MSMEs. Two, acting as a short-term stabilization measure, and this is to inject liquidity into the economy quickly. And last and not least, number three, allow for renegotiation and restructuring of existing facilities as well as new loans for MSMEs. And so in this regard, I would like to thank USAID for their role through Kenya Investment Mechanism in providing input to the scheme manual, including providing very useful feedback on the product structures, fees, pricing of the facility, long-term and short-term objectives, guarantees, coverage, target participating financial institutions, among many other areas that have been very, very important in this exercise. And so given the enormous experience and expertise that USAID has with credit guarantees globally, I want to say that their collaboration with Kenya to set up this credit guarantee scheme is highly appreciated. Your guidance and collaboration has enabled us to roll out this scheme, and the government has already indeed provided what we will call initial seed capital of about Kenya shillings 3 billion, and this was intended to pilot the scheme. My office is indeed aware and appreciates the additional support we are receiving from USAID, and this is through the Kenya Investment Mechanism to embed a full-time guarantee financial expert and the international credit guarantee design expert to assist us at the national treasury as we continue to develop and launch and also scale up the guarantee program. The excellent collaboration which have already indicated has already seen the guarantee scheme become operational, and this is after the enactment of the Public Finance Management Amendment number 2 Bill 2020, and also the publication of the Public Finance Management Credit Guarantee Scheme Regulations 2020. We've also established the Credit Guarantee Unit which is in the National Treasury, and this is intended to operate the scheme. We've also made sure that there are key personnel who have already been put in to ensure that the function is carried out properly. In addition, a steering committee to provide oversight has also been established, and so what we have also done is we've reached out and we've already onboarded 7 participating financial institutions who have already started and are doing good business in terms of lending to MSMEs. At the National Treasury, we are committed to seeing this guarantee scheme become very successful. And indeed, to demonstrate our commitment, we have provided personnel as well as significant resources that I want to say have yielded good results so far. We moved fast to ensure quick enactment of key legislations and regulations, and also we ensured that we onboarded participating financial institutions fairly quickly. It is my hope that the participating lenders and borrowers will utilize this opportunity in the most responsible way to ensure that the objective of stimulating our economy and also preserving and creating employment is realized. Our focus and our projection is that if all goes well with this first phase and non-performing loans are kept to a minimum, in the next 3 years, the National Treasury will make available an additional Kenya shillings 10 billion to the scheme. I call upon stakeholders, therefore, to partner with our government in supporting various initiatives that offer businesses the opportunity to flourish and improve the livelihoods of our citizens. As evidenced from experience, a credit guarantee scheme like this one is a product of a collaboration between the private sector and the government, and indeed it does create a conducive enabling environment that fosters economic growth. Before I close, let me just mention 3 other items that I thought would be very important for me to bring up here. And one of them is the area of public-private partnerships, where it is very, very important to ensure that we are able in the public sector to reach out to the private sector that has got the financing, that has got the expertise, and that has got the time and the proven capacity to implement, to finance, to develop significant infrastructure projects that benefit a society. And so for us, we are very keen about the public-private partnerships, and we are moving in strong to make sure that we implement large projects that are green in nature using this public-private partnership space with a new bill that should become law very, very soon. The second point that I want to also bring in is the importance of capacity building. And this is important because as we look at the supply side, the demand side, and also the intermediation, we need to make sure that there's sufficient capacity in the country to ensure that we are able to do the best in terms of exploiting the opportunities that are here in the country. Last but not least, among the 3 final points that I want to mention is the need to document our experiences in our credit guarantee scheme journey and also in the public-private partnership journey. We have already accumulated a little bit of some experience that if we documented it properly, it could be very, very useful learning experience that we can use both to benefit academia and also to benefit practice, where we identify where the bottlenecks are and we identify where we come in and intervene so that we can remove bottlenecks that are there on the way. Good people, with those remarks, I now officially open the Kenya Investments Mechanism learning event. I also want to ask you to participate in various sessions that are lined up in this event, which I am sure will offer very, very useful insights into how we can collaborate in building a sustainable financial ecosystem in Kenya and indeed in East Africa. I thank you and good day to all.
Great. Thank you so much, P.S. Moya, for taking the time to give us a pre-recorded message and certainly for opening this event. We very, very much appreciate PS Moya's commitment and the Treasury's relationships with USAID, and certainly the friendship that is afforded to Kenyan Investment Mechanism, the collaboration and partnership that we are having with them, both in terms of the credit guarantee scheme as well as public-private partnerships. I had the opportunity to ask PS Moya, after he made this recording, what he thought one of the key lessons learned over the past year as they began to launch this. And here's what he had to say.
Do occur, like the COVID challenge that we know it is the biggest challenge of our lifetime. And in terms of determining what to do next, I think there has been quite a big level of uncertainty. However, what has emerged, and in terms of a big learning lessons, is that when you put your heads together in terms of a problem, there's no problem that doesn't have a solution. But it requires people putting their heads together, thinking not only outside the box, but without a box, and looking for new innovative solutions that perhaps you've never imagined. So, for instance, for our credit guarantee scheme, this is something that we've been working on for over 20 years. And with the COVID challenge that came in significantly, I would say March 2020, we were able to move very quickly. And by December 2020, we were able not only to pass the law, the regulations, but we were able to set up the institution and provide and set aside money for a credit guarantee scheme that is properly supported and arranged through government collaboration with the various actors. And I want to thank USAID for their support in that case. Thank you.
Great, thank you so very much again. And one of the things that I really appreciated about PS Moya's answer there was really the whole idea behind a learning event, that we get our heads together and we collaborate and we think not just outside the box, but without a box. I thought that was very appropriate to be able to launch today's sessions. And now I would like to invite, it's my pleasure to invite Lorraine Rollins. She's the Technical Director for Economic Growth at Palladium, to give us some highlights for the day. Thank you. Welcome, Lauren.
Thank you, Roger. So first, I'd like to thank our guests. Our chief guest, His Excellency Honorable Julius Moya, Principal Secretary of the National Treasury, Matthew Hutcherson, Head of the Office of Economic Growth and Integration for USAID Kenya and East Africa, as well as all of the partners of the Kenya Investment Mechanism that have joined us today to share what they have learned. So together they've highlighted several important lessons. And I'll start with the importance of structured markets. So Musoni talked a lot about the value chain approach they take to their work, as well as Jahil's discussion of the way the tractor financing model works. It requires that we have actors who go out and aggregate farmers and create a market to connect them to service providers. The importance of technology, not just because it's new and cool and innovative for its own sake, but its ability to reduce friction and sometimes the costs in service delivery and in value chains. But also, I think Faheen and Jahil spoke really well to the importance of good data and the enabling power of technology to collect good data to allow rigorous decision making. And given the perception of risk in the ag sector, data is increasingly important to ensure that providers of capital are willing to take risk that they actually properly understand. The importance of staying close to customers, right? So as to develop new products, they need to understand what the clients need. Both Cooperative Bank and Musoni have been around for years serving clients, and yet it's clear the way they operate that they don't take for granted that they know what customers need. They continue to collect real-time information, continue to engage as markets change, as crises emerge. They stay close to customers with focus groups and regular outreach to ensure they understand what customers actually need to survive, to thrive. And of course, we heard a lot already about the importance of partnerships, right? That's been a key theme throughout the day, and I'll just mention a couple of the ways folks have talked about partnerships being helpful. For innovation, right? Cooperative Bank talked about the fact that partnering with USAID's, the Kenya Investment Mechanism Pay for Results incentive was just the nudge they needed to try something they thought might be too risky to do on their own, but actually once they had the data, once they tried it, experimented, learned, they realized it was actually something that was a good, viable business. So partnering for innovation is incredibly important. Other innovative models like Hello Tractor require partnerships with equipment manufacturers and financial services providers to make that work. Finally, the governments of the United States and of Kenya, right, have partnered with private sector financial services actors in order to deliver different kinds of credit guarantee schemes to the Kenyan market. And in particular, P.S. Moya spoke eloquently about the need for us to put our heads together to address crises. Together, today's speakers have also highlighted the importance of finance for mechanization in particular. Mechanization has the potential to transform Kenya and the region, contributing to food and nutrition security and making farming a more sustainable and productive and rewarding activity. As Hello Tractor and the Cooperative Cow to Cup product make clear, investing in mechanization can have multiplier effects. It also makes primary producers more bankable to the extent that mechanization allows a farmer to get better yield from their land. They are better able to repay loans to take loans rather, that they are able to repay, and those loans can enable more efficient operations as well as expansion. Finally, as Matthew Hutcherson reminded us, USAID is committed to locally led development. And in this, they partner with the local public and private sectors on Kenyan-owned and Kenyan-managed initiatives. In fact, the purpose of this learning event is to ensure that Kenyan stakeholders benefit from the lessons learned in the Kenya Investment Mechanism so that they are able to continue to drive forward the work to improve the financial ecosystem in Kenya. We hope you will join us tomorrow and Thursday for presentations from and discussions with another dozen or so expert practitioners who are working to expand access to finance and markets for the enterprises and individuals who will drive equitable and inclusive growth and development for Kenya. Thank you again.
Thank you very much, Lorraine, for summing it up all for us. And that brings us to the end of our program today. But we're going to leave you just like that. We're going to give you a highlight of today's happenings, some of the statements that have been made by the different experts, the different panelists that we had. But before that, there's a question that we did ask you in our opinion poll earlier. And this is what we did ask you. Are financial institutions sufficiently supporting smallholder farmers? We did ask you if you believe financial institutions sufficiently support smallholder farmers. And this is the result. I feel like the boss of the ECK or the IABC here. 86%, a whooping 86% of you said no. And 14% of you said yes. Clearly, we have a lot to learn because I like to tell you that Kenya Investment Mechanism is doing a lot as far as collaborating with financial institutions is concerned. And fortunately, that is one of the topics that we're going to tackle in one of the sessions tomorrow. So be sure to tune in at the same time that you tune in today from 2 to 4, where we're going to highlight some of these issues for you. And that's it as far as the opinion poll is concerned. Now, before you leave, we have some few questions for you in the chat box. There's a link there, I'm sure you'll find it on the Mentimeter. And we have some evaluation questions for you. And these questions are really going to help Kenya Investment Mechanism to make the next learning event even bigger and better. So please take time and look at that as well. So as far as some of the questions are concerned, I know we've not answered exhaustively all of them, but we have our experts who are on standby ready to answer all the questions that have been raised. But if you have any other burning issue, remember you can post it on our social media handles. The hashtag, once again, is USAID KEEM Learning Event. With those few remarks, it's about time we wrap up. And on behalf of the Kenya Investment Mechanism, the panelists, we had Jehel from Hello Tractor, Musoni, Cooperative Bank, and the entire team here would like to say thank you for giving us your time for the last 2 hours or so. And be sure to tune in tomorrow.